Hi everyone. Today we're going to dive in one of the most exciting matters that rules the way that we see investment today. The investment in crypto, the crypto market. I could say that it's like the hottest market right now where people most are going to because the volatility that we are facing in that statistically proved that this market has, it backed so the risk that someone's and the majority of people are now trying to face because this volatility put us more prone to have higher rights, even if obviously the opposite can happen too, higher losses. But seems like a lot of people now are with less aversion to the risk, and so is the type of market is going to see a high growth, and this can be like coming from as well the a bit of downfall of the market of stocks, which we are more commonly is the one that we tend to talk when we start talking about investment. So the objective is to understand all the first principles that gonna be able so to make you being a bit more closer to be a expert in that type of active, and so having more backgrounded type of decisions in whether what are like the cryptos that you see more future, and so they're gonna proliferate more, and the ones that are going to have a bad type of performance. So what's important to understand, what's cryptocurrencies actually are. They are digital currencies that use one specific technology called blockchain. And why blockchain is important? Well, crypto actives, they're kind of close from the concept of digital money. So if we want to play, and one of the first premises that kind of gives value for the concept and the active cryptocurrency is the possibility in a medium long future that it's gonna kind of will have a paper of replace the paper that the coins have in a physical world. So the ability to apply cryptocurrencies as a replacement from the digital money. But for that, one of the most important things, and if you're talking about money, everyone doesn't have to get lost their money. So it's important to have a technology that guarantees us to that our coins not gonna get lost, and the transactions that we do are validated and are registered in a system. And so the technology that guarantees that is the blockchain, because it ensures secure and transparent transactions without needings of like they are banks that are intermediaries, that's they obviously by putting their nose in the transactions, they kind of can play a role, they kind of can manipulate. And if it's totally decentralized, that's like the main objective. That's one of the premises that kind of so make us understand cryptocurrencies as useful, because they can be better than digital coin, because digital coin, the physical coin, the money, dollar, euro, any type of other coin, it has something that the value that it has is something that's depending of third parties, as they are the central banks in the countries. They kind of will define the inflation, and so the value that a specific amount of money has during their time in the year. We can have as well other important concept, which is the important concept of the that money is as well something that is really depending of the impress, and the impress something that's obviously as well again controlled by the banks. So banks, they kind of adopt a monopoly that cryptocurrencies they will not, because by being decentralized, doesn't exist in some specific entity that can impress without any type of regulation. They have a specific value that's just determined by the offering and demand. That's one of the rules that for any type of active, it rules the way that the value is perceived by market of that active. So it's something that's more depending of the perception of our people, and no, and not like the willing, that's some type of a monopoly type of position that in terms of the market of money, the central bank, even the government has in cryptocurrencies, we don't suffer that. And so solves one of the first things that's important. We have three concepts that are really important in cryptocurrencies, and which more decentralized, which more so strong is the blockchain technology that as well guarantees to not suffer with privacy tax, which obviously are something that it's really important to understand. Okay, it can as a specific blockchain, a specific network of transactions that are registered. We don't want to be manipulated. In that case, not by the banks, but they kind of can be susceptible. They kind of can be exposed to the tax coming from piracy. So we have to get attention to that. So now that we have talked about this blockchain technology, which is something that is a specific concept that's it's not easy to explain for something that it has interest is as an interest in the market. It's something that if you study, you're gonna understand so how it works. So obviously, cryptocurrencies examples, the most famous one, and one of the most older ones is Bitcoin. But obviously, it exists thousand because Bitcoin they can be they kind of the way that they are created. It's something that it's not depending just one part, just one element that is a central bank. Cryptocurrencies can be created, and they're like we're more people are able to create cryptocurrencies that people are able to create money. So we can have a lot of cryptocurrencies. That's obviously the way that they can get value is depending of the way that they behave. So their characteristics was like technologies that enable so to the people to play with that coin and make transactions. Other thing is the way that privacy plays a role there. So how much this technology, this chain, this network that registers transactions and the way that coins flips to one hand or to other, the way that they are registered and if they cannot be manipulated by some type of hackers that can enter in a chain and modify it. And we have other one that's scalability, how quick is to do the transactions and is getting registered in the market. It's what we call the trilemma of a cryptocurrency. How much we are able to have scalability by how quick is to register the transactions. Other thing is the decentralization, how much decentralized it is. So obviously, each higher is the decentralization better because doesn't exist a bank that defines the existence of the cryptocurrency, something that cannot be like really easy to manipulate. The majority of the cryptocurrencies they have like a ceiling of how much in quantities they can exist, and so it's something that regulates and doesn't so suffer with the phenomena as inflation. That's a specific matter that is kind of worrying and a bad side effect of having the money, the physical money, the system that exists in the world, in the majority of the people of the countries in the world. So now that we have talked about decentralization, the security, and the importance of scalability, because obviously if you want a coin to have value, what defines the value of the coin? How much people are demanding, and what do you want? You have a coin that has the ability obviously to be accepted, but we can easily do and quickly we do the transaction because it's something that reduces the opportunity cost of using a coin and adopting the coin as a coin that I can use in my transactions to do with other people. So it's something that's really important. And so it's like the fundamentals. It's what we can call probably with stocks, what you look for fundamentals, probably the probability of growth that a company has. Other type of component that like one of the first principles can be like the comparative advantages that the company has in comparison with the market which is included. And so there's like what I call about the cryptocurrencies, these three type of currencies that are like what I'll say the most important ones. If we're talking about cryptocurrencies with the proposal of being someone that can be replaced the physical money, which in my opinion we already was much more fair from a world where physical money and the system that we adopt could be replaced. It's something that I think it's we're closer to that phenomenon, but I don't really, to be honest, too, I don't really think that's something that's going to happen in 5, 10 years. But we can have, like, if we talk about investment, if we talk about long-term investment, which kind of far from the phenomena. We invest in something higher, so is the projections of growth in comparison so with the value that the cryptocurrency has today and the value that it's going to have in a moment, or in a potential moment, which is going to be adopted as a coin that so can be is kind of recognized by governments and that any type of other policy that can be so something that can be used to buy our goods and things. So now that we get introduced to the concept of cryptocurrency, why so it is active. So it's like it's this proposal for why we say that cryptocurrency is something that can has value. We're talking about so the three main concepts to analyze the value of the cryptocurrency. It's something that if you see, it's kind of much more easier than it was in the past. We have a lot of things that can explain, and can make this evaluation about the active. You can have like ChatGPT can help us to evaluate how the specific coin ranks into its phenomena and what are the projections of growth. So what are like the innovations that it's going to have in a blockchain of a specific cryptocurrency that so can change the way that the way that it's gonna get a prodigy of some specific type of factors that hacker attacks that can suffer in the future. We can have like information about scalability. It's like something that is worked on. The cryptocurrency is a project, so it can evolve. It's not something that is made and this doesn't have like any type of projections of growth. No, we have like coins as Caspa. Caspa is something that was created, and the way that, for example, in terms of scalability, what do you have in Caspa? Caspa today it has the ability to process around 1 blocks per second or a bit more, and the projections is when it's fully grow in the fully growth type, when the coin is like in a mature stage, is going to have the ability to produce and generate 10 blocks per second. And why blocks? Blocks is where the transactions are, like, if we're talking about semantically, are registered. And so which more blocks we have the ability to create by second, more information you want, and you can like input per second. And so more ability we have to scale, to be scalable, and so more transactions can be registered by second, and so more people have a tendency to use the coin because we have more space to absorb the informations that the transaction has happened. So it's something that's important, something that we can analyze, and the projections of growth are given so by the real source information that people that works in that coins they provide for the public. So it's something that we can have and be able to get the information coming from these identities, and we have other things that can help us to analyze, as ChatGPT is one EA that is be able to make and give us information about the coin. It's something so that we have to get attention to. So now that we have these concepts, it's understand that it's marked as volatility because these projections are a lot, not so much about the value that delivers right now, but the projections that we see that a active can have in the future. So that's why the majority of the cryptocurrencies that we see today are like more meme coins. They don't have like some specific type of value. They are just like a bit more semantic. So we have coins, the previous one that were created in that moment. I sell the Trump coin. It's not something that it's not going to be used, but because it was something that it kind of represents and is associated with a specific type of figure. It's something so that people see value, but it's not something that it has value. It's something that even amazes me how people perceive value on that, because it's something that it doesn't have like any type of value. It's not like something that's gonna have as a proposal to be used in the future. It's just by meme sometimes. So we have to get attention if the fundamentals of a coin, it's if we're seeing more just less by speculation and more by real value, we see by these type of things that I've called the trilemma, the way that the coin they kind of ranks in the trilemma. If our way that we're going to invest is with the projections of how a specific coin going to use in the future, because Bitcoin is one of the example. Bitcoin is something that has value. It has in the trilemma is ranked good in the way that is protected to attacks, is centralized, but in terms of scalability is a coin that's not one of the best. That's why it's so called as the digital gold. It's not something that's going to be adopted. It's more something that has a close paper that the gold has today, but with the function of just by being scarce, something that is kind of equalized with the gold. Gold is valuable because gold is scarce and we understand value in scarcity, but Bitcoin is just going to be something that's going to be a more like a paper of value reservatory than that's something that gold has today. And so Bitcoin, it still has projections of growth in long term. Is one of the things that if we adopt in cryptocurrency, you're just gonna have to get in your wallet. It's something it's really crucial. It's like the foundation. It's like the first mover in that market. So it's something that's always gonna have the people always going to see, and so it's always going to have demand. But we have other projects as Caspa that I've talked about that has more like the projections to probably can be coins that can be used in the future in transactions. And so that's like we should focus more in that type of things that has these projections of value, other than meme coins that are just a bit more my speculation, that don't have like something, don't you cannot do like a fundamental analysis over the type of projects that you can do with Casper Bitcoins, this type of coins. So with that type of video and in that type of work that I've been produced in that video, I hope you to get you a bit more with more information in that market, and see you in the next one.